And this therefore would definitely give us quite a support or uplift to improve our exports business. Howsoever, this will also help us to get into domestic business. I mean, eventually, as we get into QSR business, so this would be a very strong back-end support to us. So, if you speak in a very short-term manner, it may not look as bright, but then this is a futuristic investment, and in the times to come, this will definitely help us getting growth or developing another room for growth for the organization.
Got it. But the margins are better in frozen business, or no, they are same as the snacking business?
See, it's about pricing. There's not very much competition in this stuff. So definitely company will look at that this should not be margin eroding business for us.
Got it. And with respect to competition, snacking business still faces a lot of competition from the unorganized space, right? So what are the kind of trends that you're observing overall in the snacking business with respect to competition from unorganized players?
I think let's talk about category first. When you say competition, so in the
Sure.
category space, no competition falls in. So after a mild slowdown in demand last financial year, what we heard and read and also felt in the marketplace, there's an upstick in the first quarter, what we have witnessed, and this is both in urban and rural. Uh, uh, Snactionery as a category, I believe, has done better than overall food industry in quarter one. Um, in terms of competitive space, yes, I mean everyone is looking now for the space is same and all competition are there to play. It's a battleground. Everyone is putting their best effort. Hence, it is intense. But the way we look at it is that it's better for category growth. I mean, more competition, there definitely will be a category growth as well, and will always be a law of origin survival of the fittest, that who does the best, who brings the best offering will definitely take the lead. That's where it is. So it's not a place wherein there's no competition.
Got it. And so, considering all of these situations going forward in FY25, will you be looking for some kind of discounts on your products, or will you be considering some kind of price hikes? And if yes, in what products will you consider these price hikes?
Many years, last year was the one year wherein the prices or the commodity prices softened and companies decided to pass this benefit to the consumer. Hence, if you see that last year volume growth and the price growth were hand in hand for the category. And if I talk about Bikaji per se, our volume growth were by far higher than the value growth. So which essentially means that we pass the benefit to the consumers. Now, this year, what we feel is that it will be about 2-3% price increase will be there now in course of the year.
Got it. And with respect to your product mix, it's not changed much as compared to FY23. It's remained the same overall. Considering the trends, all of the like in terms of contribution to margin, it's remained the same. So, do you expect the same going forward, or do you see some kind of mix in terms of product mix? Because as far as I understand in the industry, the Western snacks are picking up pace.
Yeah, in the past, Western snacks has done better, and today, if we speak, Western snacks contribution to overall stationery is higher than the traditional snacks, and this is nothing but an outcome of that Western has been growing faster. But last year, what we have seen is that the growth of Western and traditional snacks has been the same, and this is what we believe that would now the trend would continue. So both would be growing almost at the same pace, plus minus something. So that's where it is. So it's not that just Western is growing. I would want to make a point here that improving gross margins or the product mix. One is the category mix. The second is product mix. So within the category, let's say when we speak about namkeen, so there's a huge range of namkeen. So we make about 60 plus namkeens within it, and there are few namkeens who are at a higher gross margins, who are not as high. So there is something what we keep doing is that to improve the mix within namkeens. So at a category level, it would look same, but within the category mix, there is a change.
Got it. And in respect to your focus mix, there was some kind of lowering of exports in the mix entirely in FY24 as compared to FY23. Do you see the same trend to continue in FY25, or do you see a larger portion coming from exports as compared to domestic?
I think these are two different questions. There's a different mix in exports, what we do. So, for
Yeah.
example, in frozen business, in exports business, about 40% of the business is frozen foods itself, and which will continue to be going forward. What we believe is that the frozen growth would be faster in that case. With the capacities liberating, the trials which are on having new products and all, so frozen would grow fast and hence higher contribution in the exports business. However, in domestic business, frozen has hardly a role to play. Within in domestic business, we have another set of focus SKUs which our teams are working on. They focus, and that's a concentrated effort to drive them faster.
And with respect to raw material price trends, you said that raw material eased in FY24, edible oils, pulses, flour, including laminates and corrugated boxes. Now, corrugated boxes, the GST also has been lowered on them. So, going forward, what is the kind of benefit you're expecting in FY25? Do you expect raw material prices to be within the same range, or do you expect them to go up?
It'll be very unlikely that if it stays same. So there is a likelihood that no, it would move, but I think not the way it happened in say 21, 22, and which is what is the reason that when we say that this year we should see 2 to 3% price increases.
Okay, so with respect to that, do you think that your margins, which have increased from 11% operating margins from 11% to 17%, do you expect them to be sustained at the same level, or do you see an upside or a downside from there?
So first, let me correct you. It's not 17%. It's about 13.5%.
Okay.
What we have planned and budgeted for is that year on year we should be increasing or improving by 50 basis point. That's where we wish to be at about 15%. That's the target. Now the team internally are working on. And this is just not on the gross margin or on the COGS. There are other parameters as well on the efficiency side, on the capacity utilization sides, which is what would help us, improve these bottom line margins.
Okay, and one last question with respect to capacity expansion. Any kind of capacity expansion plans going ahead in FY25?
I think we have built quite a capacity for ourselves. We are at about 44, 45% utilization currently. And we believe that now the kind of growth what we have been delivering and the plans what we have going forward, so in another 3, 4 years, we should be able to reach about 80% utilization of this. So till then, there's no plan in increasing capacity. It is to now utilize them more.
Got it. Okay. Well, Mr. Verma, thank you so much for giving us those insights on Bikaji Foods and taking our time and speaking with us at NDTV Profit. It was a pleasure speaking with you.
Thank you very much.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
and welcome. You're watching Budget Wish List, and we'll talk to one sector which has, of course, the big budget bet, in fact, is going to be consumption, and that's what most people believe on the street. And who better than Abneesh Roy, Executive Director at Nuvama Institutional Equities, joining in to talk to us about that. We also have Vipul Bhowar, Senior Director and Head of Equities at Waterfield Advisors, joining in with a broader perspective on the budget. Abneesh, I'm going to start with you first. In the lead up to the union budget, the consumer sector is anticipating announcements that will drive rural growth. Over the last couple of months, the rural sectors already began to show signs of increasing demand. What do you feel, or what do you think should be on the wish list in terms of consumption, rural consumption in specific, with regard to this budget?
Yeah, thanks. So we expect in the union budget, government to take steps to address the slower consumption in both rural and urban in the lower end. So we have seen, yes, there is some improvement in the rural volume growth for consumer companies, but still it is below expectation. Frankly, if you see India's per capita consumption in FMCG in the rural area is around $20, which is around 1/3 of the urban per capita consumption. But in most parts of the last 2 years, if you see, rural has been growing slower than urban. Last few months, it seems to have reversed. Very early days, I'll say. But ideally speaking, rural FMCG should grow much faster than urban. One additional challenge is because of the telecom hike, which happened few weeks back, almost 15% to 20% kind of hike. Again, at the lower end, there will be a problem in terms of the rural FMCG outlay, because there will be more spends on telecom. So due to all these reasons, we expect the government to increase more stimulus programs for the rural. Post the new government coming into power, the first step by the government was towards more housing, more rural stimulus, clearly focus seems to be for the coalition government. So it could be through different measures, for example, more MSP hikes, more NREGS outlay. NREGS outlay anyway is more of on demand. So last few years, we have seen the budget for NREGS may not be high, but eventually the actual spend is much higher. So we expect more such programs for the salaried class, especially for the lower end. We expect lower taxation, more exemption, because we are seeing stress in the lower end of the urban consumption also. So it will be a mix of all this. So yes, the FMCG companies are hoping that some of these will come through. So we are watching that very closely.
And data is backing that, Abneesh. In fact, rural consumption for the first time overtook urban consumption in more than 5 quarters. So clearly the urban consumption, or the lower end of the urban consumption, is also, or has been struggling. Abneesh, if more stimulus has to come in, and it's going to push rural consumption, because there is a significant part of industry that believes that measures will be populist. Where do you think the uplift will come in? Will it be discretionary spending or non-discretionary, in your opinion, in the rural piece?
I would say it will be more towards the staples, because in this lower end of the consumer, this is the more important, more day-to-day, more necessity kind of a spend. So I would say that if the stimulus program comes, the bigger beneficiary will be the FMCG companies. Discretionary will also benefit, but large part of that will be more towards the unorganized part of consumption, unbranded, those kind of players, rather than necessarily going towards the listed organized player. There will be some benefit for sure. So players like V-Mart, for example, they are into UP, Bihar, and there if the rural stimulus programs are also more indexed there because of much higher rural population, for example. So such companies will also benefit, but my sense is the benefit will be more towards the staples companies.
More towards staples. Abneesh will talk about that in a little more detail, but I'll bring in Vipul as well. Vipul, most people believe that it's going to be about 2 C's, this budget: construction and consumption. We'll talk about consumption because, like Abneesh said, and we both agree that this budget may be a little more populist. You've got a bunch of state elections coming up. Rural consumption requires a push at this stage. What do you feel? What do you feel the focus of the budget will be? And with regard to consumption, what are your expectations?
Sure. Thanks, Amina. Hi, Abneesh. Uh, so, uh, so today, mostly 40 to 45% of the population is dependent on agri income, one way or the other, and it's there is no doubt that there'll be some sort of a stimulus, some sort of a direction towards increasing their consumption or increasing their purchasing power. So that is for sure. But at the same time, I think what Abnish also highlighted, that one segment which I think the government will focus on is also the urban poor, where most of the population which had moved from urban cities to rural in the pandemic and now wanting to shift back, they too are struggling. So a holistic approach towards increasing consumption would be looked upon, and then that is where I think so. Instead of just focusing on rural income, I think they should focus on consumption at the overall level. That is uh, what the government should look at. Uh, Also, you look at the private consumption is also slowing down. So in a way, while the discretionary consumption is also slowing down, so in a way, I would say from a consumption point of view, rural of course, but at the same time, I think it should be a holistic approach towards increasing consumption. Um, on the construction side, I'll just take 30 seconds. I think one sector which was beaten down, I think there's been a decade of slowdown, was real estate. And if construction has to be talked upon, I think real estate is one sector which actually pushes across all segments. So the rural consumption also benefits. The infrastructure also benefits. So right from cement to all the way down to electrical goes to wires. I think this is one sector where I think the government should focus on. And I think they have introduced enough of incentives, and I think they should continue to push this sector. I think the last time, I think it was 2012, 2022. It's been 10 years where the real estate as a sector has seen a slowdown, and now it has started seeing an upcycle. I think they should focus on continuing this upcycle.
Right. Amnish, I don't know whether I can ask you this with regard to budget or generally an outlook, because you've got this right more often than others. What is your picks? If you've got to play the budget theme and even extending that out a few quarters, if you obviously said you prefer staples, so in the staples piece, what are your top bets and why so?
Sure. So what we have seen is in the last 2 months, there has been a good rally in most consumer stocks. Many of the consumer stocks, in fact, are at an all-time high also. We see that post the week Q1 results, for example, Asian Paints comes out on Wednesday, and similarly HUL comes out next week. There are such laggards which have still not gone back to the all-time high or even 1-year high. So post the results, in fact, our sense is ITC, HUL and Asian Paints could give a good catch-up rally. So these are stocks in which near-term triggers are a bit missing because of the weak numbers in Q1, because of one-offs or because there was a price cut, etc. But that doesn't derail the longer-term story for these three companies. So these are the valuation comfort plus reasonable recovery stories. Otherwise, in terms of good play on the rural, Imami, Dabur, Britannia, Godrej Consumer continue to be our preferred picks. We also continue to like Varun Beverages and Nestle. But in those two stocks, the valuation comfort is not there. So generally, we are positive on most of the consumer names, but the comfort on valuations will be ITC, HUL, and Asian Paints, and even Berger Paints, because those stocks are still well below their all-time high.
Right, we'll talk about QSR as well, a little more detail, Abneesh, with you, because I know you track that closely, and also Titan and Kalyan Jewels. I don't know what's happening there. But just before that, Vipul, over to you. What are your, I know you're an advisor, and hence a lot of the calls that you'd give are more strategic in nature. But if you've got to play a tactical strategy and you've got to play budget, what would you recommend on the buy list between now and the budget and maybe a quarter in?
So two sectors. One is of course agrochemicals. I think this is one sector which has been underperforming for a while, and that is, I think there is a lot of I think attraction which can happen there. So agrochemical would be one theme to look at. And the second would be housing finance companies, which will be focusing towards small ticket rural housing. So these are two themes which should be looked at. I think structurally also they should benefit with the monsoon in line and things in place. So these are two things which I think should be the biggest beneficiaries in going to the budget and going forward as well. I think that is one. These are two themes I think can be played pre-budget, post-budget as well.
And I guess the valuations are compelling, so may still look like good, attractive at their current market price. Abneesh, QSR, you had a little bit of action on the likes of Zomato, which hit a record high on Friday. You have a listing coming up from Swiggy anytime soon. How are you viewing the QSR space as whole? And also, quick word on retail, if I can get that. And I know I'm being greedy, but anything on Titan versus Kalyan Jewels? Kalyan's got a bunch of brokerage buy calls that have come in this morning.
Sure. So on the retail and discretionary space, definitely we are bit more selective. So we continue to like the more expensive names like Trent, because there again the growth metrics will be much stronger than the sector average. We also like VMart. The quarter update was quite decent in my view, and coming back of the double-digit SSG is a positive, and the rural recovery and the budget should also help because it is more focused on UP Bihar kind of market. On the QSRs, yes, my sense is the recovery will start from Q3. In Q1, again, we have seen that because of the severe heat wave, especially in-store dining has been weak for most of the QSRs. There clearly Jubilant Foods and RBA and Sapphire and Devyani all are still well below their 52-week high. But our sense is Jubilant Foods is clearly gaining market share in the Domino's with free delivery in most of the days. They are also growing much faster than Pizza Hut. So they could see more recovery in the coming quarters. Coming to jewelry, if you see clearly Titan, we expect weaker numbers to continue even in Q2. So Q1 at 9% growth was weak in the jewelry business. But even in Q2, the base margins are much higher. And Kalyan is growing much faster because of the much higher franchisee route which they have, plus the smaller base also. So overall competitive intensity in that space, jewelry space, is quite high because gold prices have moved up. So the local jewelers are able to offer more discounts. But within the organized also, Titan clearly with the higher base, and because it has more indexation to the studded diamond, it is facing near-term headwinds in terms of slower growth. Of course, long-term, the risk of the lab-grown diamond remains. With almost 1/3 of the business in jewelry coming from diamonds, Titan has that higher risk. So we will be underweight on Titan from near-term perspective. So we'll prefer Trent and maybe some of the QSR in that space plus VMart. But as of now, Titan remains underweight for us.
Right, Vipul, we're also the thick of the earnings season now, as we see, with 36% of Nifty companies reporting earnings this week. A quick one, what are you expecting from the earnings season? A more holistic view just beyond the budget, because I think that's also what's going to be significant in terms of market movement.
So, sector specific, I think where we see valuation comfort, you rightly pointed out, is, and most of the sectors are now I think recovering is technology is where there is valuation comfort. Where there'll be growth, traction, and it'll continue is in capital goods, infrastructure. I think the budget will give us more clarity on the capex, so that is where it'll continue. Autos is where we'll see growth continuing. Where there is valuation comfort is technology, FMCG, where there is valuation comfort, but market is a discounting machine. Market has already discounted more or less the earnings. I think this is something which is where we need to cherry pick on individual businesses rather than picking on a holistic basket approach. But this is something where we look at. I think financials look interesting in terms of valuation, but I think in financials the focus will be more towards non-lending side of financials and less towards lending, because in the non-lending side of businesses, which is the AMCs, the asset management companies and the wealth management companies, are seeing a lot of traction, and that is where the focus would be. So overall, expecting a stronger growth overall at a market level. Valuations might look expensive, but someone is willing to take a 1 year forward view or a 1.5 year forward view. I think markets are are not extremely overvalued. Markets are fairly valued.
Right. Vipul, thank you very much. Abneesh, always a pleasure to have you on the channel. We'll hopefully connect with both of you on earnings soon. With that, we're completely out of time. Thanks for watching. There's a lot more programming on the other side, so keep it with the channel.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
So, there is good debt and bad debt. I think there's debt which helps you create assets, which we would classify as good debt. For example, if you take an education loan for something which is truly a good program, good course, which is going to take you further, I think that's good debt. It'll pay back. It will take some time, but it'll pay you back well. The problem is if you over leverage, if you take too much debt simply because you assume that the future is a replica of the past.
As Vishal just said, there's good sugar.
Benchmark off the day's high after opening higher. The Sensex trades above 80,700 while the Nifty nears 24,600. Most sectors trade in the green, led by gains in PSU banks and pharma, followed by realty and energy. June wholesale inflation comes in at a 16-month high at 3.36%. Food inflation comes in at 8.68%, with onion inflation at a whopping 93.35%. IT earnings continue to meet street expectations. HCL Tech gains over 3% as the company's deal wins rise to $1.96 billion, cools off to 1.26%. And IREDA jumps as much as 6% on the back of strong June quarter earnings. The company's revenue and profit rose over 30%. And let's have have a quick look at the WPI inflation figures that came in a short while back. India's wholesale inflation maintained its upward trajectory and climbed to a 16-month high for the month of June, and this rise was primarily led by higher prices of vegetables as well as a rise in manufactured product prices. Now the index rose at 3.36% for the month of June. That's compared to a rise of 2.6% that we had seen in May. On a sequential basis as well, wholesale prices rose by 0.4% in June. That was after a sequential price rise of 0.3% in May. Now, the jump in WPI inflation was broad-based and along expected lines, but let's have a look at some of the internals. Now, within the WPI basket, it's actually manufactured products that constitutes the largest component of the index. That rose by 1.4%. That's compared to a contraction in May of 0.8%. But within the manufactured product space as well, it was actually food products that led the rise, and that rose by 4.3% for the month of June after recording a rise of 2.7% in May. Food article inflation came in at 10.9% for the month of June, and within food articles, vegetables saw the sharpest rise of 38.8%.